Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Well, Indian equities may start off on a positive note. US stock futures at this point of time a little unchanged. But you talk about the stock market. US stock market traded in a tight range on Monday with equities making small gains. In focus for investor would be the debt ceiling talks out there, which were postponed to this week from Friday. So that's going to be a key important parameter that the entire market will be focusing on. Talk about the Asian markets. They've risen in early deals on Tuesday. Any breakthrough which comes through the Washington stagnant negotiation to avert a US default will be closely watched out for the markets. FIIs, well, the trend continues there. By the way, they've been at a 6-month high in terms of the investment that they've made. If you talk about the daily information out there, they've bought shares worth around 1,685 crore. And if you talk about the DII data, they have too been on the buying side and have purchased shares worth around 190 odd crore on May 15th. Well, bunch of companies yet are supposed to be reporting in numbers, something in the like of Bharti Airtel, LIC Housing Finance, Max Healthcare, Bank of Baroda, IOC, JSPL, JK Paper. These are going to be some of the companies which will be reporting in their March quarter numbers out there. But let us get going and discuss some stocks and strategies today with Sudeep out there from SBI. Sudeep, good morning there. I'm going to start off by asking you about the Bank Nifty levels out there. What do you make out of that? And, do you think there is a further upside to the trend that we're seeing for Bank Nifty?
Good morning, Nikki. What we have seen yesterday is that Bank Nifty has missed the all-time high by just 0.1 point. And so that remains to be seen whether it gets crossed. But I feel the overall trend is positive. And 43,800, 43,850 will act as a strong support until we hold this. We may not only cross the previous all-time high, but we may even move to 44,300, 44,400 and above those levels. Early morning today, HDFC Twins would be getting ex-dividend. So there could be some kind of impact on minor impact on both the indices, but I feel that also would be covered up with index management. So Bank Nifty on a whole, I feel would be positive, except for HDFC Bank, which will go ex-dividend. Rest all I feel would be a buy on dips, all the banking counters.
All the banking counters will be a buy on dips. That's the word coming in from Sudeep Shah of SBI Securities out there. But apart from that, your strategy on Nifty and 3 profitable bets for our viewers out there.
Yeah, so Nifty also what we have seen is that Bank Nifty is has approached its all-time high, but Nifty is still a good 300, 400 points away from that zone. So I feel there is still some scope, still some room to catch up. And stocks like, say, M&M would be one of them, because we've seen off late, we've seen auto stocks moving, and M&M we've seen after a bigger profit booking move from 1350, 1400 to 1150 has started moving up. And last 2 days, it has once again moved above its 200 DM and is showing some signs of a catch up. And what we've seen is the chart patterns are showing a higher top, higher bottom formation. So I feel this stock would be on its way to 1330, 1340, and one can keep a stop loss of 1255 for the same. The second stock would be L&T Finance. Now, what we have seen is we've seen these financial names, NBFC names, giving a good move on the upside. L&T Finance has broken out above all its short and medium term resistances and trading above all its moving averages. So what I feel is that this stock can be bought with 95 stop loss and 110 target on the upside. The third name would be from the real estate name Prestige. Now, last few days we have seen the real estate name showing some kind of action, and it's a positive space for them, and they all of them, whether you say Lodha, Oberoi, Prestige, DLF, they all have shown multi-month and multi-year breakouts. So I feel this is a good space to be in, and this stock can be bought with 500 stop loss and 535, 540 targets on the upside.
Go ahead, Sudeep. Okay, Sudeep, Oberoi Realty will also be reporting in the numbers. You've given a bet for Prestige Estate. Sure, there is some splendid gains coming in for the real estate index overall. your pick is Prestige, but what do you make out of Berger Paints? Because the stock has rallied in the last 3 months and the numbers aren't that encouraging. How do you think market participants or the traders should now be looking at Berger Paints?
See, the numbers are not encouraging and the reaction would be there early morning. So I guess that would be done and dusted. The reaction would be done and dusted. But overall, if we see the crude prices have fallen in the last few months, and that is the reason why we have seen Berger Paints, Asian Paints, Indigo, ExxonMobil, all these stocks have shown a good move on the upside. And most apart from Berger, the others have a few of them have also given us good numbers. So I guess maybe it would be a shift within the sector. But if we see Berger Paints charts, it has given a breakout above its 200-day moving average. Also, it has even sustained above its March swing highs. So I feel the support zones going forward would be 600, 605. Then the indices are above this, it can move up on the upside.
All right, so that's the word coming in for Berger. Of course, we're going to be discussing about it in a little more detail once we address the stocks and news for you. But let's address the top movers of the day first. And a bunch of stocks that we'll be addressing will include PvR Inox, Berger Paints, Coromandel. These are going to be some of the counters that we like to talk about. Talk about PvR Inox out there, the revenue, the top line growth. We're looking at a growth coming into an extent of 22%. If we talk about the revenue growth, the number is coming at 1,143 crore, which is more or less in line with the estimate of a number of 1,070 odd crore. A bit of upside there. Talk about the EBITDA performance. It's down by 9% year on year. And the number has come in at 263 crore. Now, this is a little lower than the street estimate of a number of 286 crore. So, some amount of lesser than estimate, if I may so say, for PvR Inox when it comes to the operational performance. The margins, they've contracted to 23% as compared to 31% in the corresponding quarter. So that's also a bit of disappointing and weighing down. Net losses, they've come in at, the company has reported, there's an exceptional item out there. The company has reported on the net loss of 333 odd crore as compared to the corresponding year net profit of 16.15 odd crore. Now, the street was working with a loss estimate of around 66 crores. So, if you talk about the bottom line performance, due to that exceptional items, the losses seem to be a little bigger than what it should have been. But otherwise, if you talk about the operational performance, a bit of disappointment also creeping in terms of the operational performance of this one. Now, the board has approved raising in 100 odd crore via NCDs. Talk about Berger Paints. This is an interesting one because the stock has rallied significantly in the last 3 months. Now, if you talk about the volume growth in the decorative segment, that's way lower than what the domestic segment has demanded thus far. The company has reported the volume growth of 11%, and otherwise, for decorative segment, the growth is around 14 to 15 odd percent. So that's a bit of bummer out there for Berger Paints, if we may so talk. Talk about the year-on-year performance. Revenue is up by 11.7% to a number of 2,443 odd crore as compared to a number of 2,467 odd crore. So that's pretty much in line with what the street was estimating. If you talk about the EBITDA performance, up by 6.5% at a number of around 368 crore as compared to a number of around 375 odd crore. So more or less in line with what the street was estimating, but the margins, they've also shrunk a little bit, 15.1% as compared to 15.9%, close to 16 odd percent. So that's a little bit of disappointing out there, Net profitability down by almost 16%, and the number is coming at around 186 odd crore. Now, the street was working with a number of 229 crore. So there is a lag between not only just the operational performance expectation versus what is delivered, but also the bottom line performance. The board has recommended a dividend to an extent of 3 rupees per share. Now, what Morgan Stanley has to say about Berger Paints is it's maintained the equal weight rating and the target price of 611. Now, the stock is currently trading at around 629 rupees per share. It says that the 4Q has missed the estimates and the decorative market share gains, strong gross margin recovery, and focus on accelerating pace of network expansion rate are a bit of positive coming in on that one. So these are some of the positive factors in terms of the market share gains that we're seeing for Berger Paints out there. And also FY24, however, the management has sounded pretty confident on the demand outlook and the margin recovery. So a positive outlook, a slew of positive amidst somewhat negative numbers coming in for Berger. That makes the paint sector out there. Otherwise, the paint sector overall has reported good set of numbers in this March quarter. Coromandel, that's another one that we have. Revenue is up by 29%, EBITDA up by 6%, and the margins at 7.4% as compared to 9%. Profitability has taken a hit to an extent of 15-odd%. So that's again going to be another one that you need to keep on your list this morning. We are expecting a positive sort of a start coming in. Nifty 50 was at all-time high levels yesterday. We need to see how Bank Nifty stacks up for you today. It's interesting how bulls are behaving and dominating the markets right now. And the way the debt ceiling negotiation and the talks and more negotiations and some rescue out there will probably lead to further upside coming in for the markets. Nifty 50, well, we're looking at a flattish start coming in for the markets with positive bias though. So that momentum for now seems to be holding up. Nifty 50 is flirting around that 18,400 mark. So remains to be seen if it holds on to that one. We've seen a couple of gains coming in, a session or two of breather coming in for the markets. But overall, it's been a relentless run coming in by the bulls out there. Bank Nifty, that's another one for you and probably the one that you should be looking at. Okay, after scaling that all-time high level, a bit of profit booking is not something that can be ruled out. A little bit lower with losses of around 0.1% out there. Remains to be seen how the course has been charted out in the entire session out there. In terms of the mid cap and the small cap, index that we have, they're shining in bright, outperforming the broader markets out there for you. Mid cap index is holding up with gains of 0.5%, and small cap too is holding up with similar amount of gains, thereby outperforming the broader or the larger counterparts out there. In terms of the advance and declines that we have right now, we're going to be updating in the number 15 advances versus 34 declines out there. But metal right now, that's the index which is shining in bright. Again, auto is doing well for you. And in terms of the other sectoral indices that we have on our list right now, pharma has been holding up for you in terms of realty. Let's look at that one. Some of the FMCG, okay, so it's the entire defensive pack also doing well. Realty index is up with gains of more than 1% out there. Splendid performance seen by realty index. That's really impressive. Nifty Infra Index too seems to be holding up with gains of around 0.3% out there. And if we talk about the other sectoral indices, IT out there with gains of around 0.5%. So the defensive pack has been doing well. The rate sensitives are doing well, barring, of course, Bank Nifty, which has succumbed to some amount of selling pressure out there in early deals. Consumption also has been doing up well for you at this point of time. In terms of advanced declines, well, the market breadth is pretty much skewed in the favor of advances right now. 39 advances as compared to 11 declines out there. Top gainers that we have on our list right now: ONGC, Hindalco, and Hero MotoCorp. These are some of the top gainers that we have on our list right now. Wipro, Infosys, and Tata Steel. These are some of the other top gainers that we have. So it's the entire IT pack which has been the laggard thus far, which is showing up right now. ONGC has been holding up well. Asian Paints is doing well. Berger Paints was the one which reported in numbers, but Asian Paint right now is shining in green. Probably the comparative numbers have led to the run-up coming in for the Asian Paints right now, given how that company has stacked up in terms of the earning profile. HDFC Twins right now, they've been the top losers. Maruti Suzuki too has taken a hit. And if we talk about the other losers that we have on the list right now, Apollo Hospital, Tata Motors, and L&T. These are some of the other top losers that we have on our list right now. So this is how the trend has been shaping up early this morning. Some amount of profit booking creeping into our banking counters. And like Sudeep pointed out, any dip in the banking counters and the names is an opportunity to buy out there. Sudeep, come in on this one. HDFC and HDFC Twins out there also. They've been one of the top losers that we have on the list. Do you think it's a great buying opportunity for these two right now?
Absolutely. So both of these are good buying opportunities, and they have been on the losing side today because they've got ex-dividend. So there is nothing wrong with the stock per se, and nothing wrong with the trend of these stocks. So I feel today any major dip in these stocks should be used to go long.
All right, it's surprising how the entire paint industry has stacked up right now. It's Berger Paint, which is reported in numbers, and it's Asian Paints, which is shining in green and probably one of the top gainers out there. Within the paint segment, you've given your view for Berger Paints. What do you think about Asian Paints? Because it's one of the top gainers that we have on our list right now.
I feel Asian Paints, not only it has crossed its 200 DMA, but it is now even sustaining above that, and it is even giving a breakout on the weekly charts. So I feel this should be bought with a stop loss of 3,100 on the downside, which is the recent swing lows, and on the upside, we could see levels somewhere around 32, 30, 32, 60 in the short term.
All right, so that's the view coming in for Asian Paints. Asian Paints, Berger Paints, we've discussed pretty much the banking sector. Sudeep, we are going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you so much, Vicky.
Pleasure. All right, this is that part of the show where we address the fundamental story, and this time around we are going to be talking about the real estate sector, how the bankings have been performing, and to join and take the discussion forward, of course, we have, Hemang, Jani, the Group Senior Vice President at Motilal Oswal Financial Service out there. Good morning there.
Good morning. Thank you so much for having me.
Oh, pleasure is all ours. I'm going to start off by asking you about the FPI trend before I narrow down our discussion to more sector specific. For May FPI numbers, the last time I checked, it was at 6-month high. The trend seems to be indicating that probably FIIs have been returning back to market, and by virtue of that, probably they're going to be overweight on the banking sector. What's your view on that? And do you think banking sector continues to be in focus on account of this?
Yeah, so I think we've seen a very smart revival in the FI inflow into the country, and partly, we had underperformed, before this April. So January till March, we had underperformed, and the FI trend was not positive. But I think last about month and a half, we've seen reversal, and it's also led by what's happening globally, the possibility that the Fed may not hike the rate further. RBI also has proactively taken that step, so that has surely helped. Coming to the banking sector, I think if you look at this quarter, banking is one sector which has actually driven large part of the Nifty earnings. And given the momentum on the retail loan front, the overall margins, we do not see much of an issue or headwinds. So I think this would be definitely one of the top sector in terms of the earnings growth that one is really looking at.
Sure. I was just looking at most of the earnings when it comes to the banking sector, and the margins probably were at multi-quarter high. Asset quality was really decent. So we are looking at balance sheet, which is healthy, and we're looking at profit and loss probably, which is not growing at the pace that we saw last year, but perhaps still continuing to, go ahead with that momentum. Right now, within the space, what do you like more? Do you like PSU bank more, or do you like private banking more? Your assessment on it.
I think from a short-term perspective, when let's say BOB and SBI is going to be announcing numbers very soon, there might be some more momentum over there. But I think there is an overhang of the expected losses provisions which have been mandated, and one is not really sure of how the impact will be on the PSU banks. So if one is looking at stable, low risk kind of play, then I think private sector banks are better placed. Within that, we like Axis Bank in particular, and apart from that, something like a IndusInd Bank, which has not really performed as much. I think we could surely look at it, apart from, of course, ICICI Bank, which has been doing exceptionally well.
That's precisely what I wanted to ask you. ICICI Bank, pretty much there was a beat across all the parameters, fire in all the cylinders out there. But at the valuations, how do the valuations look right now? Do you think much of the growth is already factored into that valuation and they're rich at this point of time, if not expensive?
I think, when we talk of valuations, we have to see in the context of the earnings. Also, we have to remember that ICICI Bank has, 3-4 big subsidiaries. So when you look at the sum of parts, the valuations are not looking out of whack. Yes, they have actually inched up because of the the stock has moved up. But at about let's say 2.8 times price to book, when the bank is delivering 20-25% kind of earning CAGR, high asset quality, high provisioning, I think they are looking quite okay to us.
Okay. All right. So Axis Bank, IndusInd Bank, and ICICI Bank too remains to be one of the top picks out there in the banking space for all you guys out there. But Hemang, I'm just going to ask you, if just a broad question in terms of the rate sensitives out there, if interest rates remain where they are right now, which of the rate sensitive do you prefer the most? Would it be auto, would it be banking, or would it be realty? Which one would you prefer and why?
I think if you are looking to play the momentum, real estate is where one should really focus upon, because though the stocks have run up, when you look at a year back, they're still about maybe 20-25% below from that price point. Also, the momentum is very good. DLF announced numbers. The outlook that they've given out in terms of launches, in terms of retail sales, is very good. Also, Godrej Property, Lodha, even Bangalore-based company, now that the Congress government is going to be there in Karnataka, something like Shobha, Prestige, Brigade, these are the names which would have a lot of traction. So I think overall, from a momentum perspective, we still like real estate within the rate-sensitive pack.
All right. So, and also, affordable versus premium housing segment, where you're going to pick and choose. You've already given in the top picks out there, but just a further bifurcation of the segment will help us explain your rationale behind this.
I think it's a combination of the two. When it comes to volume growth, one really focuses upon a certain ticket or price segment. And when one is looking at the high margin thing, like what DLF or some of the Mumbai-based real estate companies like Lodha or Oberoi is focusing upon, that gives you the margin, though the volume growth may not be big. So I think one will have to focus on the portfolio of these real estate companies, and within the names that we have highlighted, I think definitely Godrej Property and Lodha are the ones which would do exceptionally well when it comes to overall growth.
All right, so that's the view on real estate. But let's also, since we are talking about real estate, let's also talk about infra, because 5 more state elections to go on, and we are seeing that infra activity already picked up. NHAI, in terms of the awarding 6,003 kilometers of projects have been thus far awarded in FY23. Chunk of it, as usual, has come in the Q4 as compared to the lackluster first 9 months. Within the space right now, what do you think? Are the balance sheets healthy? And going by that, which are the picks that you like?
So I think CapEx, if you recall, post the budget, that continues to be a very big theme, and we've seen good traction across some of the names. But in terms of where one can enter at this point, I think Siemens, ABB are the names where the overall traction looks much better compared to an L&T. Also, some of the defense names is where we should really focus upon. Bharat Electronics, HAL. I think there the overall order inflow and the growth outlook continues to be good. And we think that though capex has been a big theme, but I think typically when it starts, it goes on for 2 to 3 years. So I think we have a long, runway of growth when it comes to capex.
All right. Let's also chat about the sectors that you like and that have stood out for you in this earnings season thus far. Bharti Airtel will be reporting in their numbers. You can also put in a view out on the telecom sector. But besides that, anything that stood out for you in this earnings season?
So see, of course, banks, auto have been in the limelight. They've delivered very good set of numbers, and large part of growth is driven by them. But what surprised me personally was the performance from some of the consumer companies. So Marico, when they delivered very healthy volume growth with a very strong outlook, that definitely came as a surprise. Godrej consumer numbers were very good, and we think that the margin expansion story could be good. So compared to expectations, I think consumer, names, Asian Paints, of course, delivered very strong set of volume growth, 15-16%, and margin expansion. So I think this is one space where people had their concerns, but some of the companies actually came out and said that the outlook is looking much, much better than what they were factoring in earlier.
Sure. Speaking about paints, Berger Paints out there reported in the numbers, and you're seeing Asian Paints doing well, probably because of the comparative growth that Asian Paints scaled. Volume growth for Berger Paints in decorative segment out was 11%, and overall was to around 14-15%, if I'm not wrong, in terms of the volume growth for the domestic decorative segment out there. Within the space, is Asian Paint your preferred pick, given how the numbers have stacked up? How are the valuations for this one?
So valuations are not cheap. They are about 60 times next year forward. But I think what market looks at is what sort of growth the company is delivering versus consensus, margin part. And the fact is that the penetration when it comes to tier 2, tier 3 cities is not that big. So it's not as if that the volume growth is going to come off. So overall, we think that we should really focus on these high quality companies like Asian Paints, where the performance is exceptionally good.
All right. Sure, the multiple and the valuations have been at premium and rich and justified in many ways. But let's also chat about the other FMCG names out there that you mentioned just a while ago. You spoke about Britannia, you spoke about Nestle. Most of the pack, at least the food segment, did extremely well. That's where the growth crept in from, at least for the FMCG pack out there. Dabur and HUL were probably the ones which did not manage to surpass the expectation, street expectation. Within the space, barring ITC, what's your preferred bet out there?
I think we should focus upon the companies where the growth this quarter is good and where the outlook for, let's say, next year is again very strong. So Marico stands out. I think after a long time, company delivered this kind of a number. And the valuation is also, not as expensive as maybe HUL, right? And apart from that, I think Godrej Consumer clearly is a winner. A very strong set of numbers, a very healthy portfolio, India, outside India, category wise. So I think these are the names that surely we should focus upon.
Speaking about just the telecom sector overall, Bharti Airtel will be reporting in the numbers today. Reliance Airtel and Reliance Jio are using in divergent strategies to catch eyeballs in IPL out there. What do you think right now within the space? What do you like, and how are the fundamentals stacking up for these ones?
So Bharti, we've been liking. The only thing is that they are not in a position to aggressively do price hike, but because of the certain changes in the terminal usage charges, they might get some benefit. Africa is doing very well for them. So it's a very steady kind of a stock. It may not give you a big pop or upside in the short run. But yeah, if you have a 1 year, 2 year kind of time frame, surely Bharti should be part of the portfolio.
All right, so that's the word coming in for the entire telecom sector. Hemang, we are going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you.
Right, that was quite a splendid conversation that we had. We spoke about a bunch of things out there. We spoke about rate sensitive, we spoke about telecom, the preferred space within the rate sensitive baskets out there, along with the defensive IT, defensive space discussion out there. So that's that in terms of the fundamental discussions that we have right now. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.